Hello, everyone. So we were talking about kind of the background of, how did we get to the SPDI and why is it actually a regulatory innovation? In 2019, as I'm certain most of you may remember, Wyoming crafted 13 very digital asset, crypto-friendly laws and that addressed all kinds of different aspects of doing business in Wyoming that are very specific to the needs of the blockchain industry. And these laws addressed everything from, compliance, custody, and banking for blockchain companies. The Wyoming legislature in 2019 enacted HB 74, which is the bill that authorized the chartering of the Special Purpose Depository Institution, SPDIs. If we can move the slides, please, to one more, and one more, please. On what exactly is an SPDI? People keep talking about what an SPDI is, and it's difficult to explain it, but it's not so new in the sense that we do have a general purpose special depository institutions that have existed for many, many years and are available both under the federal as well as the state charters. So in general, an SPDI is a bank charter, and it has a special purpose, just as the name suggests. It can be, credit card banks, bankers banks, development banks, cash management banks. In short, a special purpose is one that has a limitation on the activities. With respect to the Wyoming SPDI, there are certain characteristics that are taken into account by the legislature in drafting the statutory requirements for an SPDI. So an SPDI under the Wyoming statutes is a fully reserved fiat bank. It can take deposits from customers. It can engage in custody of digital assets. It is designed and permitted to engage in facilitating payments, both domestic as well as international. And it can engage in all other permissible banking activities. However, it may not engage in lending. Next slide, please. So when we talk about an SPDI, we really are talking about a bank. And one of the key elements of the Wyoming legislation is the ability to designate the SPDI as a bank under for purposes of various federal as well as state laws. Those of you here that are trying to get your CLE credits, this is the part where we are going to go through the plethora of laws under which the SPDI, the Wyoming SPDI is considered a bank, both under federal as well as state law. Since the SPDI is an institution engaged in the business of receiving deposits and is incorporated under the laws of the state of Wyoming, the SPDI meets the definition of a state bank under the Federal Deposit Insurance Act, or the FDIC Act. Even though it meets the definition under a state bank, the SPDI statutorily is not required to be federally insured. It is, however, eligible to apply and obtain FDIC insurance on its fiat deposits if so wishes. And thus, the SPDI meets the definition of a depository institution under the Federal Reserve Act. As I noted earlier, the SPDI is a bank under numerous other federal and state laws because it is an incorporated institution that receives deposits and is supervised by a state banking regulator. And this definition is key for the operations of the SPDI on a national level. Next slide, please. So we've been talking about what is an SPDI. It really is a bank. And then, now we'll talk about some of the fundamental characteristics of the Wyoming SPDI. We noted earlier that one of the key characteristics that differentiates the SPDI is the limitation that it has on lending. So it may not engage in lending activities, which is a traditional banking activity. It also, the Wyoming SPDI is required to maintain 100%, so it is fully reserved of its depository liabilities as liquid assets. As noted earlier, for purposes of the FDIC Act, it is considered a bank, and therefore it is eligible to obtain FDIC insurance with respect to fiat deposits. However, it is not required to do so in order to operate. The SPDI, as I noted, can engage in all of the lawful activities of a bank, subject to some caveats to that. And, as part of that, it can serve as a vehicle for business cash management, operational accounts, or anything else that is really permitted, except for lending. And of course, the SPDI is required to comply with both federal as well as state laws. Next slide, please. So when we think about the Wyoming SPDI, one of the very important things to think about is, what does it look like? It is a bank, but it doesn't look like your traditional consumer bank or a community bank. Probably the easiest way to think about the SPDI and how it fits within the U.S. Banking system is to think of it as a custody bank. It resembles very much a custody bank, for example, Bank of New York Mellon. Its activities are very much in line with those of a custody bank. One very important point is that, sometimes due to the limitations of the charter on lending, as well as, just because of the limitations on the activities, some commentators and others have, grouped or put the SPDI in the bucket of narrow banks. It is not a narrow bank, and we will not be going into what is or what is not a narrow bank and the regulatory as well as policy implications that term does have today. But suffice it to say that it's very safe to say that when somebody is talking about the SPDI as a narrow bank, that is not the case. And instead, probably the right analogy is a custody bank, the Bank of New York Mellons, as one of the best examples out there. So what does a custody bank really do? It's kind of obvious by its name. A custody bank in general is focused on custody, on storing assets. It has fiduciary management duties. It can conduct a variety of transactions with assets. and is providing an on and off ramps to various markets, the securities markets, the commodities markets, and consumers' bank accounts. There are, when we think about the characteristics and the limitations on activities of an SPDI, a lot of this is actually contained in the regulation as well as in the chartering requirements. Just like any bank, the SPDI is subject to statutory requirements with respect to the chartering, the supervision, liquidation, and as closely related as traditional financial institutions. Next slide, please. One of the key elements of the Wyoming SPDI is that the legislation was very purposeful, and Wyoming's regulatory framework was extremely purposeful in addressing the needs and kind of the holes that were in the traditional financial system when it came to the servicing blockchain and digital asset types businesses. One of the very important aspects, and I think one of the key aspects of the Wyoming legislation, is the very explicit permission for the custody of digital, for a bank and the SPDI to engage in the custody of digital assets. So when we talk about, the custody of digital assets, one of the key elements of that is that under Wyoming law, digital assets are viewed as in the same light as traditional asset classes for commercial purposes. So the commercial property law status of digital assets is very clearly established under Wyoming law. That is not the case in any other jurisdictions in the U.S., except for maybe Rhode Island. But and there are a number of states right now that are actually looking at this exact provisions and are debating, considering the implementation of these types of provisions, very much fashioned on the Wyoming provisions in their own state laws. This is really important because, having clarity about the commercial property law status of digital assets does implicate a whole host of different issues in just traditional everyday operations, both of a bank as well as, commerce. One of the other things that we have learned since Wyoming instituted its legislation is a further confirmation of the position that Wyoming had, that, the custody, safekeeping, and servicing of assets is something that is traditionally a banking activity. Recently, the OCC came out with their interpretive letter 1170 on July 22nd, 2020. And in it, the OCC confirmed for national banks that national banks can engage in the custody of digital assets. And again, I think this is a real benefit of the Wyoming legislation, was that it was, one, very clear that that is part of the permissible activities, and specifically addressed the custodying of digital assets. But, it's not just the custody aspect that is important. As I noted at the very beginning of our session, Wyoming enacted a comprehensive framework in order to make things work. And one of those key elements, as noted, is the ability conferring the commercial property law status of digital assets. Next slide, please. So for the chartering process, I have put up the link to the Wyoming Banking Division, in which all of the instructions for the application to charter an SPDI are contained. One thing to note is that while the regulatory framework and the chartering process are very specific to crypto and digital assets, it is, as I noted earlier, this is a bank. And as such, the chartering process is very thorough, and it does require the ability to address a number of both statutory as well as Wyoming Banking Division requirements in the application process. Next slide, please. So one of the things to note is, and I noted that the application fee for filing it was set at $15,000. So, and then there is a very long list, as you can see from here, of the requirements that need to be addressed in the application. So the application forms are supported by the application submissions that need to be very specific and address each one of these requirements. So, we need articles of incorporation, and there is a specific provisions as to how we go about it. We don't just incorporate something in a corporation and say this is going to be a bank. There's a specific process that needs to be followed. There is, a requirement that there is a, paid-in capital stock as required by the banking statutes. There is, if the SPDI is going to be going forward and it's going to be applying for FDIC insurance, then the FDIC application, along with all of the forms that are either going to be or are submitted to the FDIC, also need to be provided to the Wyoming Department of Banking. Next slide, please. So you will see that I have kind of called out 3 very specific requirements and have bolded them and kind of made them really stand out from the long list of requirements. And these are, they don't seem as a very heavy lift when you read them, but they are, in my view, kind of the key to the application and the chartering process. So the first one is a statement with supporting evidence demonstrating that the conditions in the community in which the proposed institution would transact business afford reasonable promise of successful operations. This is the business plan. So as a bank, every bank is required to be profitable. And in order to meet its profitability goals, it has a 3-year de novo period. During that time, the bank can engage only in the business plan that was filed and approved as part of the chartering process. And this business plan has to provide a sufficient basis with evidence that it is going to be profitable by year 3, and that the bank will be able to operate in, profitably within the parameters of the application and the business plan during that time. The next requirement is that, a statement with supporting evidence demonstrating that the proposed capital and surplus are adequate in light of the current and prospective conditions. So one of the things that is also very important to note that in chartering an SPDI, the same capital, I won't call them requirements, but the same capital needs are in place. There are statutory capital requirements, no question about that. And it's set at $5 million, but the Division of Banking has said that, it will be requiring a $10 million of capital for the licensing, at least the last time I looked. But the ability to support the bank, the ability for the bank to have the sufficient capital is extremely important. Here, there are a number of different concepts that are, potentially applicable that need to be addressed. One of them is the relationship between the SPDI and the incorporators or any of the other entities within the corporate family. It is also very important to note that, the capital requirements, may not be sufficient, and the application and the business plan do need to address, stress situations and what happens if the capital that is in reserve is not sufficient due to unexpected events. One of the things that, we have seen in traditional banks is, and actually even more so in credit card banks, is during the COVID crisis, right? As we're going through this, we have never had a global pandemic that would allow us to build models that address our various capital needs in a bank in a pandemic scenario. While that may not be as applicable to an SPDI because of the prohibitions on lending, it is something that is necessary to be addressed. When it comes to the capital requirements, there are things that need to be addressed of other events that may negatively impact the operations vis-a-vis capital. The other requirement is a statement with supporting evidence demonstrating that the proposed executive officers and directors have sufficient experience, ability, and standing to afford reasonable promise of successful operation. Again, the executive team, the operational team, as well as the board of directors are key to the ability of the SPDI to operate successfully and be profitable in accordance with its business plan within the 3-year period as needed. It is extremely important to note that, the SPDI is operating not only with respect to the custody of digital assets, that is just one of its functions, but it also has the ability to take deposits and will be taking deposits from consumers. It will be, connecting to the payment system of the United States and globally. And as such, it needs to operate within the same operational, and management provisions as traditional banks. And so the experience of the executive team in being able to operate in what I would call are the key terms safely and soundly is going to be extremely important. And being able to demonstrate that during the application process will also be extremely important. Next slide, please. There are a number of other requirements, and I will I will leave you to reading all of the different provisions. 1 hour is just not enough to do justice to all of the requirements. But one other requirement that ought to be noted is that, in the preparation of the application and the submission, as it is customary with any other bank charter application, the regulators, and in this case, the Wyoming Division of Banking and the commissioner are permitted and may request any other information that they would like to have that is required by the regulations, or that would be, a further insight into the filing as it has been filed. Next slide, please. It is also important to know that while the division and the commissioner can ask for additional information, there is an ongoing, continuing obligation throughout the application process to be supplemented, especially when there are changes in significant information, or the application changes in materially, or if there is an FDIC application that is going to be taking place at the same time. Oftentimes the different regulators may require different fine-tuning of the business plan based on their own requirements and their own risk assessments. And so with the FDIC, if there's an FDIC application, and that process is somewhat similar to the process that the Wyoming Division of Banking is doing, where you have an application and then some input from the regulator on the sufficiency of the application, and the process along the way is one which is very collaborative between the regulators and the applicants until an application is complete and is ready to be accepted for filing. There are next slide, please. There are a number of, various requirements that have to be addressed in the application. For those of you that may have not seen or have gone through all of the Twitter posts by Kraken Financial, which received its charter, and it's the first SPDI in the state of Wyoming, you will probably see, I highly recommend reading the thread that their general counsel, Marco, put out on Twitter. And for those of you who haven't seen it, there is a fun picture that shows you a very, very thick binder. I am terrible at measurements, so I think it's a 6-inch or 12-inch. It's really, really, really big binder, which shows all of the different documents that were submitted as part of the application. I highly encourage you to take a look, and it will give you kind of an idea as well as an appreciation of the things that need to be included in the application. So once the application is completed, and you have gone through the back and forths that are necessary, and the application is accepted, then there is the next step will be the Wyoming Banking Board hearing. For the Wyoming Banking Board hearing is provided for in the Wyoming legislation regulations, and that is standard, just like the formation of any other bank under the laws of Wyoming. There are specific procedures as to how the hearing is to be conducted, and the statutory requirements on which the board is to assess the application of the applicant. The board is then, within 90 days after receipt of the transcript of the public hearing, will bring a decision. As it is customary, and as you would expect, the board can either approve, it can conditionally approve, or disapprove an application for state banking charter, including an SPDI. Next slide, please. So there are, as I noted, statutory factors that the board must take into consideration as it reviews the application, as well as the hearing. Before approving it, the board has to ascertain, and it does so through reading the application and the public hearing, that the following conditions, which are again specified, are being met. The public need and convenience will be promoted by the establishment of the proposed financial institution. The conditions in the community in which the proposed financial institution would transact business afford reasonable promise of successful operation. Again, profitability is key with respect to any bank. Actually, any business, right? Financial institution is being formed for no other purpose than the legitimate objects contemplated by the laws of the state. The proposed capital and surplus are not less than the required minimums and are adequate in light of the current and the prospective conditions. Again, going back to the capital requirements in the business plan. That the proposed officers and directors have sufficient experience, ability, and standing to afford reasonable promise of successful operation. One which is kind of interesting and also something that needs to be considered prior to filing the application. Seems logical, but still sometimes it kind of falls in the cracks, is that the name of the proposed financial institution does not resemble so closely as to cause confusion with the name of any other financial institution transacting business in the county. So, lastly, and very importantly, that the applicant has complied with all of the applicable provisions of the law. Next slide, please. So this is just a quick summary of the charter application timeline. The application is received by the State Banking Commissioner. Within 30 days of the application, the commissioner will notify the applicant of any deficiencies in writing, and the applicant will have the ability to either amend, or if there are no deficiencies that are being identified, then the commissioner will accept the application for filing. Once the application is deemed complete and is accepted for filing by the commissioner, then the commissioner notifies the chairman of the State Banking Board, who then establishes the time and place for the public hearing that we were just talking about. The public hearing has to take place no less than 60 days and no more than 120 days from the date that the application was accepted for filing. Within 30 days after receipt of the notice of the time and place of the hearing, the applicant is required to publish notice of the application and the public hearing in a newspaper of a general circulation within the county where the proposed financial institution is to be located. This is an important requirement, and sometimes in the digital age can be forgotten, but it is essential to be done. The publication has to be made once a week for 3 consecutive weeks prior to the hearing, and the proof of the publication has to be submitted to the commissioner prior to the hearing. Then the public hearing is held, and then after 90 days after receipt of the transcript of the public hearing, the board will issue its approval, conditional approval, or disapproval of the application. Next slide, please. And next slide, please. So this is one of my favorite visual slides about regulation. And this slide shows how complicated the US regulatory authority over payment clearing and settlement systems is in the US. And this just gives you kind of the complexities of the both federal and the state system when it comes to supervision. Next slides, please. So making some, next slide, please. Making a little bit of a, cleaning that slide up and making sense of who actually regulates the SPDI and how, and on the basis of what. So with respect to the SPDI regulatory landscape, we know that the primary regulator is the Wyoming Department of Banking and the bank supervision. And, as a Wyoming financial institution, the SPDI is also, subject to the consumer protection laws of the state of Wyoming. On the federal level, the Board of Governors of the Federal Reserve, the Fed, is one of the regulators. What the scope is will be dependent on whether or not the SPDI applies and receives either a Fed membership, becomes a Fed member bank, or it applies and receives a Fed master account. As we have noted throughout this, one of the things that the SPDI can, but is not required to do so, is obtain FDIC insurance for its fiat deposits. If it does so, then the FDIC will be one of the federal regulators supervising the SPDI. Due to the fact that it's a consumer facing, the Consumer Financial Protection Bureau also has jurisdiction to supervise. And last but not least, we have the Federal Financial Crimes Enforcement Network, FinCEN, and the Office of Foreign Assets Control, which are also going to be supervisors and whose laws and regulations will need to be complied with for the operations of the SPDI. Next slide, please. With respect to the SPDI Wyoming supervision, the Wyoming Department of Banking is developing a comprehensive regulatory and supervisory framework for the operation of the SPDIs that is focused on the safety and soundness of digital asset activities. Next slide, please. And as we are coming to the end of our time together, I'll just leave you with a couple of what I consider to be key considerations for a success of an SPDI. For any SPDI to be successful, it will need to assure that it's able to address a broad range of things. It will need to address the regulatory approvals, the licenses, as well as the supervisory frameworks that apply to it, both during the chartering process as well as operationally. It will need to have an operational and technical robustness, again, just by the sheer fact that an SPDI is engaging in the provision of services with respect to digital assets, simply requires, technical robustness to all of their systems. The safety and soundness principles are key in the business plan as well as in the operations. Compliance is, as always, crucial and super important, and has to be addressed both in the application process as well as in the operation. Consumer protection, also very important part. Risks that the operations introduce to the US and the global payment system need to be understood and addressed, as well as data protection. And that is all, and we have come to the end of our time, and I am willing to ask if anyone has any questions. Please don't hesitate. And if you are unable, and we are unable to address your questions, you can always reach me at Angela at D as in dog, LX law.com.